Many families are facing money trouble with the pandemic. So is it time to refinance your mortgage and potentially tap into your home equity? Brandon Haefele, CEO and President of Catalyst Mortgage, joined us on how to explain the do's and don'ts of this big topic. Brandon, thanks so much for being with us this morning. Good to see you.
Good to see you too. Thanks for having me.
Okay, let's start with the positive. Let's start with the do's. When should somebody refinance and get a new mortgage going? I want to start with the general rule. What is the general rule? We can all keep it in our minds.
General rule on refinancing is if you can drop a quarter point or more and you can do it for completely zero cost, it's worth it. If you can pay title and escrow fees, which is about, let's say, $3,000 for everything, and drop a 0.5%, it's worth it. But then if you're going to pay points and fees, you want to really drop about a full percentage point.
Okay, what about the terms? What about if you can cut the length of your loan? Is that a
really
good thing?
Right now, yeah, it's a great point, May. Right now, we're in such a good environment to where interest rates are so low that you might be able to go ahead and just refinance to a 27-year term. Let's say you only have 3 years, paid in, so you have 27 years left. You can refinance to another 27-year term or a 26 term or 24 and just lower the interest rate. So then that way you're not resetting all the way back to back to 30 years. But more importantly, you can also look in this case, since interest rates are so low, about refinancing and shortening the term. Let's say you have 25 years left. You might be able to go to a 20 or even a 15-year right now and keep your payment the same.
Okay, that was going to be my question because, Brandon, that scares me. Will my payment change? I don't want my payment to go up every month. I need that money in my pocket.
Absolutely. Really right now, you're able to refinance in most cases to a lower term, but keep your payment the same. But more importantly, if you then couple that with utilizing your equity in your home to consolidate credit card debt, you actually might be able to lower your overall output more.
Okay, so let's talk about when not to refinance. What's the general rule here?
Really, if you're pulling cash out for things that aren't going to benefit your financial picture, like paying off credit card debt, if you're going to want to buy a boat or go on a vacation, I really don't urge people to refinance to do those types of things.
No.
You really want to do it when it's going to improve your financial situation.
Okay, well, let's talk about how long you plan to stay in your home as well, because that could be a big factor.
It really is, especially if you plan on moving in the next 3 or 4 years. The type of loan you take out, the amount of fees that you pay might change. So you really want to be forward with the mortgage professional you're working with on what your plans are, not just now, but in 3 to 5 years from now, because that can change the type of loan that we would recommend for you.
Brandon, you mentioned the boat and the vacation. That all sounds so good right now. And if I've got equity sitting in my home, it could be really tempting to want to take that money out, but maybe you want to do some home improvements. When is it okay to tap into that equity and pull out some money?
Really perfect thing that you just said there, home improvements. That's going to increase the property value of your home while also letting you enjoy your hard work and what you're paying for. So I'd say things like home improvements, things like consolidating credit card debt, where it's going to free up monthly income for you to where then maybe you can put more money into your 401k. Maybe you can go ahead and put more money toward principal and pay down that loan faster. Things that are going to improve your financial position, that's it's important to then utilize your home's equity.
You mentioned paying off that credit card debt. That as well could boost up your credit score, right? So
such a good point. Such a good point there, because right now we're refinancing clients that are doing cash out now, and 6 months later, they're able to refinance with a lower interest rate because their credit score has jumped up so much by paying off that debt.
And you can get a better rate, right, with that better credit score. All right, Brandon, I'm going to put off that vacation and buying that boat, maybe, and do something responsible.